we'll get started. We have Vishwesh with us, who's recently joined us as a research analyst. So he's going to cover the market view. The format is going to be, we will talk about market, our view on the market, maybe very short, 15 minutes or so, 15 to maximum 20 minutes, and then we want to open the floor for question and answers. We're more keen to address whatever queries that you may have right now than to share our view on the market, because we anyway do a lot of these monologues in form of the WhatsApp broadcast and all. This we want to make it slightly more interactive. So Vishwesh, over to you.
Yes, sir. Thank you for this. So right now I will just represent you. I'll share my screen. So I will just talk you about some of the economical data and also the market data, some valuation thing, and where some opportunity I'll talk about. So this is the GDP trend that we can see for the few quarters. This is data from last 2.5 years. So we are trading above averages. The GDP growth is above average for the last 2.5 years. It is about 7.8 currently. So GDP is growing. That is one point. This is the long-term GDP growth data. So this is data from 1980s. So there has been growth, gradual growth since 1980s for the real GDP. That is positive. And this chart is about the rolling returns, the 10-year rolling returns for GDP. So we have been constantly growing the GDP on 10-year basis. There is no any loss. There is no any slowdown that had happened in the GDP growth. Nation is going on strong. This is the per capita GDP. So the population is declining, and the GDP per capita has been also in the long term trend towards positive. So we are above the trend line. This India's GDP as a percentage of world economy. So we are gaining our share in terms of GDP towards world, and also this is the per capita GDP against per world capita GDP. So over there also we are gaining our share. Government is increasing infra capex constantly, so it has a higher multiplier effect for growth of economy as government spends infrastructure. So that is positive for long-term growth trend for the GDP. At the same time, government is being able to reduce their fiscal deficit compared to the GDP. So they had spent more in 2020 in COVID times, and there was a spike over here, 13% of fiscal deficit that since 2021. This fiscal deficit is been declining, is reducing its debt, so it's quite positive for the balance sheet of the government. This is the PMI data, the export data for India. The PMI index for India is highest among other countries. Also, in terms of numbers, Indian export is increasing, absolute numbers, lakh crores. So positive sign for the export. So if Indian currency is depreciating against other currencies, it's quite good for the export market for us. This is the salary growth. Over here, inflation adjusted salary growth is acceleration over here. So it is positive for the consumption in the economy, that the growth of the employees are increasing, the salary. This is the credit is happening. So credit growth is on a higher side since last 1 year.
So this is very heartening to see. Like, credit growth is, I think, at almost 2 or 3 years highest level. for Indian banks. There was a downward trend in credit growth for in like around 24, 25 to 2.5 years. I think the credit growth had gone down quite significantly. It was some single digit. Now it is gone to digit, and it's I think one of the highest in some 2.5 3 years at 14-15%, which is very very healthy credit growth. Credit growth, we can say credit is like a lifeblood of any economy. So whenever the credit growth is low, the economy kind of it has a negative impact on the economy. And whenever the credit growth is healthy, like what it is right now, it positive impact on the economy.
Right. So in terms of valuation, this is the Nifty against gold plus silver chart. So this is Nifty divided by gold plus silver. So over here, you can see this is data from 2006. We are trading currently trading at a lower end of this range that we can see in the past. So it tells us the attractiveness of Nifty compared to gold and silver. So this is the chart of Nifty 500. This is the net profit of Nifty 500 companies compared to the GDP. So you can see over here
Are you
in
showing the chart?
2020. Sorry.
Okay. Yes, sir. Got it. Got it.
So over here you can see in 2020, the profit growth of five Nifty 500 company was 2.1% of the GDP. Now it has more than doubled. It is currently at trading at 5.3. So profit have increased for the corporates, the listed corporates compared to the GDP. So it is quite positive sign that profit growth is happening for the corporates, the listed companies. So that is there. So if there is earnings growth happening, the share price returns will follow earnings growth. So that is positive for us. This is the Nifty valuation compared to other emerging markets as a basket. So this is the data from 22, and this is long-term average over here. We are trading below long-term average. The Indian valuation is trading below 10-year average against emerging market. So it also tells the attractiveness of Indian market compared to other emerging market like Taiwan, Korea, China, and so on, compared to the 10-year historical valuation. So this is IT specific. This is the dividend yield data. So this chart, what it tells is that per dividend that IT companies been able to generate divided by the valuation that they are getting. It is currently trading at all-time high. What it means is that whatever dividend that this IT company has been able to generate, the valuation is quite low. So dividend is high, valuation is quite low. That makes this ratio trading at all-time high. Over here, the next you can see in 2008-9, it was about 3%. When there was crash in 2008 and 9, the whole market fell. At that time, dividend yield was 3. Now it is in trading at all-time high at 3.6. So it is the attractiveness of Indian IT compared to the ability of dividend that they will be generating. This is for private banks. So in green is the price chart, price return chart, and pink over here is the price to book valuation. In 2022, in COVID times, we are trading at the same levels of valuation in terms of PB valuation, price to book valuation. So it again tells the attractiveness of the valuation comfort that we are seeing in private banks over here. The value is similar to COVID is there. And this is the data of top 10 companies in India: Infosys, TCS, Axis Bank, HDFC Bank, Reliance. Top 10 companies, Bharti Airtel, L&T. So over here, 8 of the 10 companies are trading below their 10-year averages, the valuation averages. So Infosys trading at 17p, compared to 10-year average of 23. ITC 18 compared to 26 of average, 10-year average. And Bharti Airtel is trading at 10.4 P compared to long-term 10-year average of 13.5. So large companies also are trading at quite discount compared to long-term averages. So recently there was spike in oil prices. So this data talks about our dependency on oil. So we are net importers of oil. So the net import, whatever oil that we are net importing compared to the percentage of GDP, that has been declining over years. There was in 2013 where the net imports contributed about 55%. The size of that was about 5.5% of the GDP. Now that size has shrunk and reduced. Also, the oil intensity is declining. So the usage of oil has been declining per GDP value that we are generating. So percentage of GDP consumption of oil has been declining. And this is the absolute price chart of oil. It is in the long declining trend that is there, because renewable also been increasing, and there are EV autos that are being used. So overall, the chart is the long term. So we are not getting affected by oil increase. So that was the data that I had. So might talk about that.
So first 2 3 slides are just behavioral, and then we'll talk about something which is technical. So every year, I mean, you probably already know those who have been investing for long enough time, they know ki 10-20% of decline happens almost every year. On an average, the decline for last 20-30 years, 40 years is about 20%. The extent of decline has reduced significantly from 2003, and it is declined even more from 2012 onwards. So on an average, you can see there's a 10, 12%, 15% kind of decline on Nifty. But in spite of having a 10, 12, 15% kind of correction every year, the market ends up at on a positive note on 80% of the times. So this is something that you need to understand. These declines are temporary. It is not like a permanent thing. And all the corrections which have happened in the last 5-10 years, all of them have been surprises. And it seemed like the end of the world, whether it was the Russia-Ukraine war, whether it was COVID. Even in the year of COVID, the market was ended at positive. 2020, the Nifty was up 16% for that year. So what I'm trying to say is when the things are happening, when bad news is flowing, it seems that the world is going to end. But eventually, market recovers, and market historically it has ended on a positive note. The small caps, the drawdown on small cap is even more steeper than it is in large cap. But another trend that you need to see is that the drawdown has the extent of drawdown has reduced from 2015, last 10 years. The reason for this is that the quality of small cap or mid cap in the indices has improved significantly. They have reduced the debt on the balance sheet. The growth that they're going through is significantly higher. We're going to talk about in subsequent slides the kind of growth that is there in mid and small cap stocks. So the growth rates are high. The corporate governance standards have improved. The debt to equity, like the leverage, has reduced for the in their balance sheets. So the quality of companies has reduced, which is why a lot of us are haunted by the small cap, which was there like 15 years back, 10 years back, and they used to decline 40-50% or something like that. But that those days are long gone by, and we should not equate the today's small cap with what used to be a small cap in say 2010 or 2007. The quality of small cap has changed quite significantly. Uh, this is another behavioral chart that there's a 75% probability that Nifty will double in within 6 years time, and there's a 25% probability that it will double in less than 3 years time. But when we have the correction, the kind of deep correction that we've had, the the chances that it will double in less like faster time period, maybe 4 years or 5 years, goes up quite significantly. There's nobody can guarantee about anything, but the odds are on your side that the index probably doubles in maybe 4 years or 5 years, and mid and small cap probably double even faster than that. So if you we need to take a slightly longer term view, and we should use the correction that we have to increase the allocation. This we have been tracking for some time. This is the number of stocks in Nifty 500 which are trading above their 200 mm average. It's been a very accurate indicator of major market bottoms for the last 10 years. This is the data for last 10 years. 2000, if you remember, there was this major correction which happened in Jan Feb of 2016. It started in March 2015, and it lasted for almost a year's time. And when market bottomed out, there were only 14% stocks which are about their 200-day moving average. And that formed a major bottom, and market went up quite significantly over the next 2 years. Again, we saw similar number in October 2018. And during COVID, it was horrible. It was like just 4% stocks were about their 200 moving average. And again, in 2022, after Russia-Ukraine war, this number had gone to 12%. Last year, around February, March, also the number had gone to 10%. Right now, it is 15%. So all these occasions, 2016, 2018, 2020, 2022, and 2025, all of them were major bottoms. And except for this, even right now, we have not breached this 2020 levels. But in most of the cases, that level was never breached, and the market went up significantly in the next 3 years or so. And historically, like mid cap and all caps have doubled from this level. So I don't know whether they'll double or not this time, or they'll take more time than that. But the risk reward is very attractive. That is something that we need to remember. So this is something, the technical data that I wanted to share. Key in the last 3 to 4 years, the growth rates. No, this is the top line. This number is I don't know if you can see the cursor. I'll just the other one. So this chart is talking the revenue growth for Nifty, quarterly revenue growth, and 9-month revenue growth for Nifty for last 11 years. And this is quarterly trend on revenue growth for Nifty 500. Like this is the broader market index. So what we are saying, it is cyclical, and right now we were on the cusp of some kind of a turnaround before the Russia-Ukraine war started. We were on the cusp of some kind of a turnaround, and next 2-3 years, even fundamentally should have been quite good, and I think it will still be quite good. I think. Uh, so here again, if also it was on the cusp of some kind of a turnaround. Last quarter, the revenue growth was 11 quarter high, and this is for Q3. If you look at Nifty, median growth for Nifty stocks was like medium, more than half the stocks grew more than 11%. Uh, and this is I think this is revenue growth, top line revenue growth, and almost 60% of the company's top line. In this is for Nifty 500 data. Almost 60% of the companies their top line grew by double digit, which is a very healthy number. And almost 28% of the companies their top line grew by more than 20%, which is like phenomenally good number. And similarly, the PAT growth also was very healthy. Almost like 45% of the company's bottom line or profit growth was more than 20%. So which is again like a very healthy number. Median or like more than half the companies, the earning growth was 18%. So you should not take a very top-down view on what is happening in the market, what is the earning growth for Nifty or something like that. You should, if you look at the bottom of number, though, is there in the broader market. There are many companies, many sectors which are doing well in the indices. If you were to look at the drawdown from 3-year high, the number of stocks, like almost half the stocks are down at least 40% from the top, and nearly 36% stocks are down. With like almost 75% of the stocks are down at least 25%, and one third stocks are down at least like 50%. So this is the the extent of correction now is in parallel with what happened in 2020, what happened in 2011 to 2010 to 2013, and 2007 to 2009. So it is like a major bear market. Is not a small bear market. And typically, whenever these kind of bear markets end, the bull market that starts, it lasts for a like extended period of time, 3 years, 4 years. That kind of bull market we usually have. Now coming to the question about what happens on the Iran war. Uh, my view is that so the consequences of an ongoing war are very, very severe. The with every passing day, I think the or every passing week, as the supply chain gets disrupted for various products, including oil, gas, and chemicals, fertilizers, the consequences of war are like very, very significant, which is the exact reason why the war will not continue for a very long period of time, because nobody wants this war. It is not US's war. US people in the US themselves do not want this war. The approval rating for Donald Trump is one of the lowest, I think, in last whatever time he's been a president. It is the lowest. There are protests which are going on in US. They're spending $2 billion per day to fund this war. So that is a problem with them. Even Iran, even if they are like the negotiating very hard, they themselves are in struggle. Uh, a lot of well, they are also depleting their arsenal. They are depleting their manpower. Key people are getting assassinated and so on and so forth. So in that context, both countries probably will come to some kind of a agreement at some point of time. What is happening right now, it like seems it's called a typical way of negotiating which happens between politicians. It's called as brinkmanship. Brinkmanship is like you take a extreme position and say कि जो करना है कर लो, that kind of thing. And it is just to to get a good deal out of politicians. One thing we know that politicians are like they are slave to their supporters or the people who vote for them. So today, I mean, a lot of the people have waged, a lot of the heads of the countries have waged war just to distract the population from whatever is happening in their own country. If there is any problem which is happening, just to distract, they have waged a war. For example, Russia, Putin was about to lose his election couple of years back, so he went and attacked Crimea. Then something similar happened in many other countries. Right? Whenever there is any Iraq also, we had seen something similar when Saddam Hussein's popularity was decreasing. He had went and attacked Iran. So those kind of things have people have done just to please the masses, and there is some nationalistic sentiment whenever the head of state does that. But this time, nobody in America wants this war. People are coming on the streets and protesting against this war. So it is obvious that even Donald Trump wants to end this war. How it ends and all, we will see. But it will end sooner than we probably think. We should not think it is going to last for like couple of years and something like that. It is just not, because the kind of disruptions which are happening because of the supply chain shortages which are happening. It is this just cannot last. There's too much pressure on America to cut a deal with the Iran. So I think it is just a matter of Donald Trump, getting some kind of a face saver in this thing. And my opinion is that the consequences of war going on for like extended period of time are very, very high. So which is exactly why nobody wants this. Like, who wants a self-inflicted global recession? Nobody wants that. We've already come out of many problems in the last 5, 6 years, right? From COVID to Russia-Ukraine war to commodity and inflation and all of that. Now nobody wants a self-inflicted recession. Our view is that the war is not going to last for too long. All the bearish views that you see on whatever social media or TV and all, a lot of them probably are thinking that the war is never going to end, or it's going to last for a very long period of time. So our view is that it is not, it cannot last for too long. So that is the view. As of now, the market has declined very, very sharply. You look at, I think Nifty and all was some 10-12% down. The broader markets are some 15% down. And this is after a very brutal bear market which happened from September 2024 to February 2026. Already markets were down quite significantly. And on top of that, there was another capitulation kind of a decline which has happened. If you think about it, what are the real consequences of a Iran war on Indian economy or stock market? Uh, uh, Typically, the in these kind of things, what happens is the oil prices go up. When oil prices go up, the inflation goes up, and second problem which happens is that government has to absorb the impact of higher oil prices, because it cannot pass on the oil prices are double. It cannot like double the petrol from 100 rupees to 200 rupees, or like even it cannot increase it by 60-50% rupees also. So government finances take some kind of a hit on that. So those are the two problems. But if you look at the inflation for last 1 or years, inflation was very subdued, under 2% or something like that. So even if it rises, it probably will still be in the comfort zone of RBI. RBI is okay with 4 to 6% inflation, even if it rises by 2, 3, 4%, it still is in the comfort zone of RBI. So it's unlikely that the inflation is going to go out of control. Even in 2022, when oil went to $135, and it stayed above $100 for like I think 8, 9 months, and it stayed above $80 for a very extended period of time. Even in that kind of a period, the India's inflation was under control. So the chances that inflation goes out of control is very, very low in our opinion, and the chances of a rate hike or anything like that is very low. In that context, the correction which has happened in the market is unjustified. If you look at the Nifty's weights, right, 35% is lenders, banks, and NBFCs. 35% is banks and NBFCs. 13% is IT companies. About 10% is allocation to Reliance. 7-8% is Bharti Airtel. So two-third of Nifty is between these 7-8 companies that I spoke about. So banks, it is not going to impact banks any significantly. We'll open the floor for question answer. Let me finish. I'll not take much time. So will so bank earnings are not going to take any hit because of for the ongoing Iran war. The IT services probably are going to benefit because the rupee has got depreciated, so it is going to benefit them. So they stand to benefit from the depreciating rupee. Reliance stands to benefit because it's a refinery. Then you look at other thing like Bharti Airtel has no impact on this. L&T, there's some people say it can get impacted because 30% of their order book is in UAE or Gulf. But another view is that because the oil prices in Gulf are at a very high level and they're making good money, so maybe they might get even more projects because the Gulf states are making more money, so they might get more projects, and their growth prospects also could be quite healthy. So L&T stock is down some 20 odd percent from the top. I think L&T and Bharti Airtel are the best stocks in large cap, and the growth rates are phenomenal. The runway for them, both of them is very, very long. So in that context, it become very overheated, and the correction is just a pretext for the overheated sentiment to cool down, in my opinion. So what I'm trying to say is that the war actually does not have any significant impact on the earnings of the market as such. There'll be some sectors, some companies where there'll be an impact because of supply chain disruptions, chemicals or fertilizers, or even I'm hearing a lot of industrial projects getting slightly delayed because powder coating and all is not happening because of gas shortage and so on and so forth. But that will be like 1 quarter delay, maybe 2 quarter delay, and probably whatever that pain is, right, 1 quarter, 2 quarter delay, that pain is already there in the price because because the stocks have corrected very significantly. So that is our view. A lot of pain in the market is already factored in by the market. Our market is not all that significantly impacted by whatever is happening in the like Iran. war has no real significant consequences for our market, our economy as such. Government finances does get impacted, but as I said, we are expecting that the war will end in a couple of weeks, maybe couple of months. In that context, the hit to government finances also is not going to be very significant. So that is our view on the markets, and I think we believe it's a very good opportunity. It's some kind of a capitalization. We believe the market has corrected so steeply only because the FIs have sold 1.25 lakh crores in the month of March, and that 1.25 lakh crores is not just India related selling. It is selling which is global selling. The global ETFs or global funds, like they saw the highest amount of selling, second highest amount of selling since like whatever October 2008 or something like that. So it is one of the highest selling which has happened in global markets, and that is kind of impacted the Indian market thing also. So you should not think whatever happened in March has got some, like it is because of some fundamentals or something. It there's the whole thing got some accentuated because of what happened in HDFC. HDFC is a very large weight in the market. But other than that, matlab, that is our view. Ki this is see, just like when markets go up, and there is a what do you say? The markets go up much, like they go up much more than they should be going up, and there is some kind of a euphoria, and they go up more than justified. So something like that has happened on the downside also. Pendulum has swing too far on the side of pessimism, and the kind of correction has happened is probably not justified in our opinion. So just one last thing I want to show, and we'll open it for the question answer. So this is a tweet I had uh, put out in 2020, 5th of April 2020. The first rally right out of the bull market. The quote which was there in the previous slide was that bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and die on euphoria. So the first move, like the whenever the first move starts, now it is that at the time where there's a lot of pessimism, and it is relentless. Like this is a data from for I don't know which year it is. I think this was 2007. I think 2008 or 9. This is 2009. 2009. There was a 97% rally without much correction. Then there was a big rally, 32% rally without even a 3% correction in 2012. Then there was a 56% rally without even a 5% correction after 2014. Then there was a 42% rally without even a 5% correction in after 2016. This is for mid caps, and data for small caps is also more or less similar. If you look at small caps, there was a very steep 22% up move after 2016. There was a 38, 39, 40% move after 2000. I can't figure out actually. 2014, this is 13, 14. This is again 2011. There was a 31% up move. There was a 111% up move after 2009. So what I'm trying to tell you here is that markets will go up when the overall sentiments are very negative, and the first move of the lows now is very sharp, and it surprises everyone. And all of whatever losses you see, or whatever low returns that you might be seeing in your portfolio or any funds that might be in losses or whatever, they will get recouped in no time. There'll be like what we've seen 1 month where the market has gone down, the indices have gone down by 10-15%. There'll be a month where indices will go up 10-15% in 1 month, and there'll be like 3-4 months, 6 months where it goes up like 25-30%. That is how market function. And one thing I've noticed in last 10-15 years is that there's a cycle of positive and negative news. When a market peaks out, no, the negative news start one after another. Negative news start to happen. If you look at last uh, 18 months, one after another, there have been some other different kind of negative news. And when market starts to go up, also slowly things start to get positive. So 2018 to 20, I'll share example about that. To 2018, the market topped out when there were the short-term capital gain tax was and long-term capital gain tax was started by the government. And then there was another, and after 6 months, 8 months, I think ILNFS defaulted. So that accentuated corrected INSL because of ILNFL default, the bond market freeze, and Yes Bank went down under. Then D1 Housing Finance and so many other companies, a lot of companies, fraud came to light, and they went through a very bad phase. And next 1 year, the GDP growth was only 4%. So, so by the time we were recovering out of that, then we had COVID, which was, so one after another. There were some other problems which kept happening, and slowly after COVID, market bottomed out on the day of lockdown, and it started to move up even when the cases were rising, even when the lockdown was getting extended. The market still kept on rising. So, and the news started to flow afterwards. So I remember in the when the results for September quarter came through, the results were fantastic. Like nobody expected. The results were so amazingly good. Nobody expected the result will be that good. So that was the first good news which happened. Then November we had the vaccine discovery. A lot of vaccines were discovered. Then they said, "Ki how are they going to give vaccine to so many people, crores of people? How are they going to distribute, so on and so forth?" By March, everybody had at least one shot of the vaccine in 4 months' time, and another couple of months. There was second wave, third wave, but in spite of that, market did not fall down. And so one after another, there were some or other positive news. So the news flow is also cyclical. When in bear market, all that can go wrong goes wrong, and in bull market, no, all that can go right goes right. So that cycle will also turn at some point of time. We should not extrapolate the current bad news which is happening. So you will have to have the patience one after another. You will see yourself ki one after another. I think probably it had already started. As I said, ki the earning growth was about to turn. It's after like 2 3 years of slack, the earning growth and top line growth was about to turn. And I'm still quite optimistic. It will be good for next 2 3 years. Will be quite good for Indian corporate India. So now we'll open the floor for question answer session. Maybe you can just raise a hand, and then we can call out the names. Maybe we can call out the name, and then he can ask the question. Sam?
Sandeep, there are some questions posted in the Q&A section as well. If
Okay, okay,
people
okay.
can put out there,
Yeah, I am not saying that.
we can have people voting out there as well. That helps.
Yeah, I can't see any question answer session in the text.
No, in the Q&A, in the under the tools, there is a Q&A.
Yeah, just give me a moment. Snehdeep, can you read out some of them? Two
Yes,
questions. I can see questions for full. Yes, IT sector is going to do
yes.
bulk layoff. We have seen recent Oracle move, removing 12,000 employees. How does this thing impact the market? How much aggressive do you suggest to invest in current market? Say one has a corpus of 10 lakhs, all 100% or 20% gradual up. Okay. So, so far, whatever I am observing, a lot of the layoffs are much more in the companies, product companies, which are like US based companies. They are laying off a lot of people. There are layoffs in IT services also, and Oracle is probably an exception where they have laid off 20% of the population. If you look at Amazon, we hear that they have laid off 30,000, 40,000 people, 50,000 people. But we need to look at the number in context that they have 15 lakh people employed with them. So that context must not be lost. There was a news in recently that TCS laid off some 15 20,000 people, but they employed 5 6 lakh people. So that, like, you have to look at the number in the context of the total people that are employed. And some attrition was happening even otherwise also. It was not like the attrition has started only recently. The attrition used to happen even in the past also. Maybe the attrition is on the higher side. There was over hiring, whatever. And the AI thing is also real. I'm not disputing that AI is the thing is not real. But there's one presentation. Just give me a moment. I'll open one thing. Just give me a moment. So impact of this, like I'm talking purely from stock market point of view. So IT people should not take it to their heart. Ki why is not empathetic to our situation. But I am just talking from the stock market point of view. So we had done a presentation in in Delhi, and where I had spoken about this topic. Just give me, I'm just opening that. Just give me a moment. Yeah, yeah, I found it. So what will happen if there is a slowdown in India's IT services company? The presentation, one of the topic of the presentation which I did in Delhi a couple of months back. So if you look at whatever is the dearth or whatever is the slowdown which is happening in IT services, right now there are some like 54 lakh people which are employed in IT services companies, and they were adding, they are still adding about 1.5 to 2 lakh people net. This is net addition to the head count. GCC's got 17 lakh people, and it is expected that the number is going to reach about 30 lakh in by 2030. This can be slightly here and there. Both those numbers can be slightly here and there. But what I'm trying to say here is that even if we assume that the IT services headcounts become flat, the GCCs are adding a decent number. Like whatever numbers the IT services are adding, GCCs are adding a similar number of head count. Okay, this is a top-down view. As I said, I am empathetic to the situation of people in the IT services. But if I'm talking purely from a capital market point of view, दैट कुछ फर्क नहीं पड़ता क्योंकि मतलब जितने लोग निकाले जा रहे हैं उससे ज्यादा लोग ले रहे हैं हम लोग. Another data, okay, this is about the wages. This is the total employee cost of all listed companies is about 16 lakh crores. Unlisted companies में it is about 13 lakh crores. Total wage bill गवर्नमेंट सेंट्रल गवर्नमेंट का मिला के 23 लाख करोड़ है. टोटल वेज बिल इज 53 लाख करोड़ का कॉर्पोरेट का वेज बिल है. एम्प्लॉय एंड गवर्नमेंट प्लस कॉर्पोरेट इज टोटल इज 53 लाख करोड़ इज द टोटल वेज बिल ऑफ कॉर्पोरेट इंडिया. उसमें से ओनली 5 लाख इज IT सर्विसेज. And another aspect you need to understand is that IT services companies pay less salary as compared to the GCCs. GCCs, the salaries are significantly higher. Maybe I don't know exact number, but maybe 25, 30, 50% higher than what a similar employee in IT services would earn. So money in the hands of people is still very, very healthy. It's not like कि people are not making from a top down point of view, public के हाथ में पैसा रहने वाला है, वो खर्चा करेंगे तो कंजम्पशन चलेगा, घर खरीदेंगे, कार खरीदेंगे. And that is the point basically what I'm trying to say. Another big thing that we need to note here is that out of the 53 lakh crores, government employees wage is 23 lakh crores. On that, you add PSU, which is 3.3. So 23.3 plus 3.3 is 26. Like 50% of the wages are taken by the central government and government employees, state government and PSU employees. अगले एक साल में, डेढ़ साल में, what I had heard is in next 6 quarters, the government will roll out the 8th pay hike, 8th pay commission hike for all the employees, and the extent of hike it could be anything between as low as 3%, 3 lakh crore to as high as 5 lakh crores. So even if I'm talking about the total hike is going to be as high as the entire salary of IT services people. तो ले टॉप डाउन हुए अगेन एज हेड की टॉप डाउन हुए कि तो मतलब पीपल विल लाइक लूज जॉब, बट टॉप डाउन देखोगे तो देयर आर मोर, द हेड काउंट इज स्टिल इंक्रीजिंग, द सैलरीज आर स्टिल इंक्रीजिंग, एट द एग्रीगेट कॉर्पोरेट इंडिया का सैलरीज आर इंक्रीजिंग, एंड ऑफिस एब्जॉर्प्शन भी कंटिन्यूसली इम्प्रूव होते जा रहा है. Office absorption rate has jumped again significantly. This is as in the face of the fact that people are saying that there's layoff. TCS themselves have taken so much space across all the cities. Recently, they bought some huge space in Whitefield, Bangalore, where they're going to they have a 25,000 seater capacity office. They paid some 900 crores for that. So and they're doing a long-term contracts, like they 15 million square foot, 20 million square foot, that kind of spaces they are taking. So if their future is so bleak and they're not going to employ so many people, And why are they hire like taking so many offices on hire for such a long term? So that is something that perplexes me. So I don't know what is the situation here. So that is the thing. That is, I hope that answers your question. Ki, at individual level, even if it is there, there's some issues. But at the aggregate level, top down level, if you take a view, it's not so bad. And about if you have some money to deploy, I think you should deploy 60, 70%, 70% right now, maybe 25 to 30% you should keep it for the conflict to resolve, and then you can deploy that now. But you should deploy today. Even you should be prepared for 2-3%, 4% downside, which you cannot predict. उतना तो मतलब अगर इक्विटी में पैसा बनाना है, तुमको डबल करना है पैसा 3 साल में, तो 2-5% नीचे जाए तो क्या ही फर्क पड़ता है. But maybe whatever money you have, maybe 70% you can deploy today, and 30% you keep it uh, for the crisis to resolve. See, इसमें एक minor risk ऐसा भी है कि there's this crashing escalates and they bomb the plants and those kind of things. If that happens, then market will go down 10-15%. So that time also you can deploy that 30%. Or if there's a ceasefire and the market goes up, that time you can deploy the remaining 30%. So my suggestion is you invest 70% right now, and 30% you can keep it for later. Yeah, next, who was the next person?
Next, Akshay Kumar.
Yeah, Akshay, hi. Akshay, you can unmute yourself, Akshay.
So he has mentioned in Q&A. He asked that, hi sir, are we seeing gold and equities moving up together and also beyond silver?
So I refrain from talking about gold and silver because I have been cautious or bearish and it has gone up so much. So I continue to remain cautious. And if you ask a financial advisor, it is good idea to have some allocation to gold in such uncertain periods. But I believe that gold has run up too much, and my belief is that next 3 to 5 years returns in gold will be practically zero because it has run up so much already. Gold is like that. See, when gold may the bull markets and bear markets are very long. In stock market, maybe bull market is 3-4 years, and then there's a 1 or 2 years of bear market. In gold, no, bull markets, bear markets are 8-10 years. So in that context, when the gold tops out now 7-8 years, it doesn't go anywhere. 10 years, it doesn't go anywhere. So I am cautious. I am cautious about gold right now. I feel कि next 5 years the returns will be quite low in them. Yeah, Rita, you wanted to say something? You can unmute yourself.
Kapil here actually.
Yeah, Kapil.
Yeah. Actually, I wanted to ask you about what would see. IT has been a big drawdown. So, is it a good time to invest in IT and banking also because of the HDFC thing? The banking bank Nifty has also gone down for quite a lot.
Yes, yes. In fact, if you see the presentation that Vishwesh had given, we had highlighted two opportunities. One was IT, where the dividend yield, dividend yield is one kind of a valuation metric. One of the cheapest, like in the history, IT services never been this cheap. And historically, whenever it was so cheap, like whether it is 2009, whether it is 2017, so next, it has gone up like 3-4 times. Let's say it doesn't go up 3-4 times. Even if it doubles in like 4 to 5 years, that is still a fantastic opportunity in my opinion. The larger companies are growing at a slower pace. TCS kind of companies are growing at slower pace, but they are available at like a throwaway valuation. And the mid and small cap are still going at a decent pace. It is only the large caps which are growing at a slower pace. The mid and small cap are still growing at a very decent pace. So I don't know what slowdown or what people are talking about. The growth is still decent in mid and small cap IT companies.
No, actually, it is because of the AI integration. They are see because of the cloud and everything. They are saying that IT services means they will not need no so many IT services companies will not have do so much. So they will not get the business because of the AI. That is what the thing was because of that the panic had happened. So what do
Right.
you think about that?
So what I have seen is this kind of if you look at the previous two crises now for IT services, I'm talking about the IT services 2009, when the first crisis happened, they were saying ki there's going to be a recession in the US equity, US economy, and US are the biggest customers for IT companies, and that will have an adverse impact on the growth for IT companies. But actually, in reality, how things turned out was quite completely different. What happened was because there was slowdown, everybody wanted to cut cost. All the corporates in America wanted to cut cost, and actually uh, they got a lot of contracts just because of that, and the growth was quite phenomenal for next couple of years for all the IT companies. In 2016-17 also they were saying ki because of automation, the people will lose job and IT services will not do all that well. If you remember 2016, 15, 16 was also very similar. But IT services reinvented themselves and they adopted and they were able to cope up with that. This time the problem is slightly different in terms of the billing hours and all of that. I understand that. So I don't know how it exactly this thing is, but there's another view where people say ki because of AI they'll be able to do much more complex work what they were not able to do in the past. So that is also one of the views ki because and efficiency is going to improve from stock market point of view. Again, as I said, na ki stock market or capital markets are all about profits. So if companies are able to deliver same numbers or better numbers with say, less manpower, no, it is good for that companies. So that is
One
also
last just following up question and this same issue, because of these the people are whatever the layoffs are happening in whatever companies. So do you see any impact on real estate for this, means for the residential real estate?
so it can happen if the layoffs are significant. As of now, if you look at the layoffs in terms of the percentage of the total manpower for that company. So, for example, TCS has done say 30,000. They have laid off 30,000 people on a 5 lakh 6 lakh total base. It is like 5-6%. So it is not very significant. It still has a mental impact that people are uncertain about their job, so they might postpone buying, so on and so forth. That can happen, but and how many people actually buy houses in a year? So that is also the things. There could be slowdown. To answer your question, there could be some slowdown, but I don't think it will be significant. So unless there are the like there's like 10-15% kind of a workforce is removed. In that case, then it is a very different situation. Otherwise, so US company US is highly capitalistic, right? So all the companies which are laying off right now, all of them are US based companies. So they are highly capitalistic. What happened in Oracle? I mean, you can understand. Like it was only for profit. There was no rationale for hiring 20% of the workforce. They just wanted to create working capital for the capex that they are doing. So that so Indian companies are not like that, and higher employment is actually in IT services companies, which are Indian companies. So they still have the Indian value. They are not totally capitalistic as the US companies. That is my personal view actually.
Can I add over here about this IT companies? The
Yeah,
we
Vishwesh.
talked about cloud, right? So cloud is
Mhm.
more in Anthropic is more into enterprise solutions, and our Indian company, this Infosys, are infra to this enterprises. For anyone to implement AI solutions like cloud, right? That cloud needs to understand the existing infrastructure of the enterprises. So the Indian IT comes in to bridge that gap to for IT to implement in this existing infrastructure that these companies have. So it is quite beneficial. They are also partnering with these giants, ChatGPT and Anthropic. And also one thing is that the margins, there is no any impact on margins for this Indian IT. So they have been able to hold the margins, profit margins, and also there is data for order book. There is also no impact on order book for this Indian IT. It is quite steady and growing. So that was about.
Yeah, correct. And in fact, the IT services growth was like one of the highest in many quarters. The last quarter, the services तूने एक वो देखा if you parallelly मतलब थोड़ी देर में if you can share that screen no विश्वेश तेरे पास अगर है तो After some time, you can share. After we answer the next question, you can share that screen. How IT services revenue is growing.
So there are, sir, a few more questions in Q&A. So
Yeah.
the question is from Ram Kumar. How sector mutual funds are selected in the portfolio based on technicals or fundamentals or both?
Core funds are not selected on basis of technicals. It is selected on the basis of fund managers' long-term track record. We look at the fund size and all of that. Also, we look at that, and we don't like concentrated portfolios. We prefer slightly diversified portfolios because concentrated portfolios are more risky as compared to diversified portfolios. So that those things we look at when we consider a particular fund in core funds. When you invest, wherever we invest, whether it is core or tactical, that time we look at the technical. But core is like long term. No, you cannot like there. We don't look at the charts. When we want to, you give me 10 lakh rupees, 20 lakh rupees, then I decide how to invest based on charts. But while selecting what we don't look at charts.
So, next one is from Biren Panda. I'm already invested as much as possible. How do I get safe leverage and invest in deep more?
So I cannot advise you to leverage and invest actually. When you have to hold you have to be patient with your current portfolio, whatever you have. I would not suggest leveraging to invest. There are
Next
some
from
people who have
Ashish
raised
Momaya.
hands also. Who's V? Can maybe we can take some questions from that also. V.
Sorry, Vamsi here. Vamsi.
Yes, Vamsi. Hi.
First of all, thank you very much for what do you say? Keeping me away from all those Motilal and quantum funds, all the high flyer funds. Thank you. Thank you. Sincere thanks. Okay. I don't think so I've made money, but definitely I have not lost money. So
correct. Yes.
That's very much. So now the second point is that, see, I think I have whatever the target amount I wanted to invest, I have invested in the last 1.5 years. Now, of course, there are a lot of things which are moving and I don't want to take a call on those things. But you were showing one interesting graph, like whenever the market is turning around, it's giving in, what do you say, returns of 15%, 20% in a month.
Correct.
So I think I have bought a lot of most of the dips. Now, is there any way that you can give us upward pyramiding also instead of going like catching to try
Yes.
the bottom?
Yes, and upward pyramiding has to happen very fast because I said now first move, you will see a time now where mid cap and small cap will go up like 40% in 3 months, 4 months, 5 months. We'll see that time. Sometime in next 1 to 1.5 years time. We'll see that time also.
No, but
So pyramiding also has to happen very fast. Whenever it happens, it has to happen very fast.
So as I said, I'm done. I think I'm almost through with my commitments, whatever I wanted to invest through you. I'm very happy with that. But now I want to do upward pyramiding.
I
So
understand.
just I think Prathamesh, I think if he's in the call, I think if he can help me
Prathamesh is
out.
on leave actually. I'm not sure he's on call, but I remember I'll pass on the message. We are recording this, so he'll watch it when we share the recording.
Yeah. So if at all the market corrects by another 10%, probably I'll invest. But I'm more interested now in upward pyramiding. So as and when I've seen your calls, like whenever they take the breakouts and all those kind of things, and you feel there is a total confirmation with regard to turnaround, and probably from there might be a 2%, 5% correction after the 15% correction or 10% correction. I want to do that upward pyramiding. Okay.
Sure.
And any sectoral funds probably at that point of time.
Okay, sure.
Thanks once again, Sandeep. Thank you very much. Thank you.
Yeah, okay, Vamsi. Yes, Ashish, you want to say something? Ashish Momaya.
Yeah, Sandeep. Yeah, hi.
Hi, Ashish.
Yeah. Thanks for organizing it. I hope this continues. See, my question is this credit growth that the chart that was shown, it's a good credit. that you say that it's a deadline, okay. Uh, but there is also a risk on that, in the sense, the unsecured loans are on the higher side in this cycle, right? And that's a risk that is being highlighted. And what is your take on this? That whether this has a on the banks.
I had recently read something on those lines कि banks are not at all lending. मतलब NPAs are at like multi-year, multi-decadal low, but banks are still not lending very aggressively. I understand what you're saying, but you see कि well, you to compare this with the salary growth that that we're talking about. I think Vishwesh in his presentation he had shared one slide where the salary growth and everything is doing fine. So in that context, I don't see why should the unsecured lending actually take a hit. In the last, I think through 3 years, the highest growth has happened in gold back loans. The gold back loans, so there's a collateral in that. Unsecured loan, I mean, why do you think there'll be a big even in COVID also nothing happened actually. COVID was such a big impact, and even then there was no increase in the NPS of any this thing. And even if it happens, it is still very content. I remember 2 years back, RBI had put a lot of constraint on banks on how much they can lend to NBFCs and how much they can do unsecured lending. They had like the cap was in form of some credit deposit, some ratio. They have some ratio. I forgot the ratio what it is called, but they had put some cap on how much they can lend to unsecured this thing and how much they can lend to NBFCs. I'm talking about 2024. So RBI has some proactive thing. And what I've read is recently even the unsecured uh, stress book, no book stresses that book is also come down in last couple of quarters.
So also one thing I'd like to add. So if
Yeah.
we talk about private banks, right? They don't lend much to unsecured things. So they have credit 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 qua- high credit quality, and most of the
Yeah, you can continue. We can hear you.
okay. Okay. So if we talk about PSU, right, they have high leverage going on for them. If we talk about NBFC, they have high leverage going on. The debt to equity I'm talking about. So there might be much impact over there if there is some no credit quality issue that might happen. So, but private banks are quite there is much secureness over there in terms of credit quality and also the leverage. So private banks look good compared to PSUs who have higher leverage and compared to NBFCs who might have lower quality, credit quality than private bank. That
Okay, okay.
So
So
any other
my next
questions?
question from
Yeah.
yes, there are a few questions in Q&A. So next question is from Parag Narkade. He has asked three questions. One is small cap to Nifty ratio was at high. Is that issue resolved or still large cap may outperform for some time? Second question is have you started stock recommendation service? And third one is this good time for healthcare and diagnostic fund or you have any better sector?
Yes. So Nifty to small cap, I think everything is corrected quite sharply. And at individually, if you look at both large cap as well as small cap, are quite attractive. And I remain more bullish. I am a small cap fan. So if I see historically, if you see any bull market, right, small caps will outperform large cap by a significant margin. So I think I believe we are at some kind of a turning point, and I believe in next 2 3 years we'll see bull market. And if I were to choose between the two of them, I will choose a small cap. But even if you choose a bit like multi cap, where you get allocation to both large cap, mid cap, and small cap, that is also fine. Everything is looking attractive. So that is first question. Second question was about stock advisory. We are thinking about it. We are hired a research analyst. We are contemplating taking a RI license, and also it is still farther away, and we don't. If there is some development on that front, we'll share with you. Right now, there is nothing to share about it. And sector-wise, I think when the overall market is so attractive, I don't know whether we should go for a narrow theme. When the overall market is not attractive, it is better to go for narrow theme. But when like everything is down, like one third of the stocks are down 50% and 40% of the stocks are 50% of the stocks are down 40%. In that kind of a market, it is better to go for a diversified fund like a flexi cap, multi cap, or a small cap fund. That is what my belief is right now. Yes, Arvind, I assume I have answered Parag's questions. Arvind, you wanted to say something? You
Yeah,
want to
hi,
ask?
hi Sandeep. Hi
Hello, good
Sandeep. Good
morning.
morning. Thanks for the opportunity and thanks for the inputs. I think we've analyzed the market from a macro and valuation point of view well, right? So that there is no doubt, and that has been a persisting story in India. I wanted some inputs on the flow dynamics, the capacity to buy, the cash ratios, who will emerge as the new buyer. So I'm myself trying to do some study on this. So if we look at the market from FII, DII, promoter, and retail point of view,
Mhm. Mhm.
who is going to have the net demand? Is there any metric on this? Do we have a cash ratio for entire mutual fund sector, equity schemes? Any inputs on that are welcome. Fundamentals and valuation, I think we heard enough and absolutely agree with it. Now we need more capacity to buy. Net demand kahan se aane wala hai? That's what I'm trying to understand. Something. Thanks.
Right, right, I understand. But if you look at the past corrections, right? If you look at the past corrections, like say what happened in 2020, March 2020, that time also markets went down quite sharply. And I'll share a screen just one minute. I have one window I want to share. Not able to. So I'm not able to share the screen anyway. So what I'm trying to say is that 2020 also it looked like the market is going to there'll be no winner, nobody is going to come and buy. But FIs came and buy right now. At least our clients are there are enough clients who are buying also. I mean our net numbers are quite positive. Even now also net numbers are quite positive. Even this month also people have bought. Last month also people have bought. So it's not like they're not buying. Okay, I finally could sell do this. Monthly, I am not able to do. I think I don't know. Yeah. So this is converted to monthly. So यहाँ पे there was a massive selling which happened, and when things turned around, FIs came back actually, and they invested, and the annual number for 2020 was positive actually. Similarly, in 2022 also something similar happened. I think when the markets turned, FIs came back actually. FIs will come back because if markets have become so cheap, it's not like FIs will not come back at all. Part of emerging market, and emerging market flows will come. Asia, Pacific, ex-Japan, money. A lot of money flows through routes, either through emerging market route ATFs or through MSCI Asia, ex-Japan ITF. And in both the of the like highest ever underweight position in both these things, 3-4% underweight position in both of them. So we're at, and we would appreciate like rupees depreciated, our markets have corrected quite sharply, and global markets have gone up. So though 2-3 years back there was a huge arbitrage, like we were trading at significantly above average, and global markets were trading at significantly below average. I believe sometime in future that will flip, and FII flow will come back to India also. As it has been going to other countries, it will come back to India also. That AI bubble, so last year, a lot of money went to AI and AI related companies. So somewhere I think they might want to diversify, and some money might hopefully come to India also. So FI money will come. I think the SIP so toppage and all might be happening, but what I see is कि typically people in a lot of this fintech, that's problem in the fintech. Our मतलब for us, it is not happening. I don't know. And मतलब, I believe कि the investors are slightly more mature this time, probably because of the experience that they've had in the past. This thing. This is our data. This is our data, and this is the net numbers. Okay, net numbers. So outflows are not so great. Like last year, last month we did 8 crores of net sales. The month before that was 7, 12 crores, 13 crores, 7 crores. This month also is still running. So we're not witnessing significant outflows. So ऐसा कुछ नहीं कि FIs बेच रहे हैं हमारे, तो नहीं बेच रहे, पता नहीं, मतलब some clients are panicking. ऐसा नहीं कि कोई पैनिक ही नहीं कर रहा है. Some clients are panicking, but it's not like overwhelming कुछ नहीं है ऐसा. That is the thing. So FI in domestic money is still coming, and I believe FIs will turn. I mean, it's been a mirage, and we've been expecting it for last 2 years, and I know it has not happened. But I believe होगा वो भी.
Thanks, Sandeep. If there's any number on cash holding of mutual funds, that will help. If that
Yeah,
number
I
is
had
10, 12,
I had this
15.
number. Yes. So ये एक मेरे पास है, ready data है मेरे पास. Just give me a moment. I am just trying to figure out the exact slide where I had mentioned this. I have it in some presentation. Yeah. So this number, I'll share that number, and it is 6 months old data, not recent data. This is September of 2025 data. So annual SIP flow was about 3.5 lakh crores. Annual PPF flow is 60,000 crores. Mutual fund, at that time, mutual funds were having 2 lakh crore cash, and balance advantage fund, well, this is equity mutual fund, and balance advantage fund, they had about 1.4 lakh crore cash. Total liquidity was about 7 lakh crores. So some of the balance advantage one, and this also must have got deployed in last couple of days, I think.
Yes.
If any,
So next question.
yeah.
Yeah, I have a
Yes. So
question.
next question from Sajid Shetty. Any views on the impact on pharma sector from the recent announced tariff in US?
So I'm not an analyst, but what I've read is that it is more for branded drugs, and 90 or 95% of the India's exports are for generic drugs. I think Sun Pharma does a lot of this branded drugs, so the Sun Pharma will take an impact, but the aggregate pharma, the impact is not all that significant.
Yes, please, ma'am. Hemlata, ma'am, please unmute yourself and ask the question.
Yeah, I was just asking a question. Like the people, we invest money, right, in the mutual funds, and it goes to you. From you, where exactly it gets stored? All across India, where does the money reside?
Money gets invested in stocks actually. So money gets invested in stocks. That is the thing. Money is in your account only, the mutual fund accounts, the fund manager's account, and they buy shares through that using clearing corporations of the stock market. There's an infrastructure, stock market infrastructure, where they have something called as clearing corporation, through which all the transactions are executed.
Okay, so Sandeep, what you're saying is from us, it goes to you. From you, it goes to the corporates.
It doesn't
From
come
the
to us at all.
corporates,
It goes directly to the mutual fund. It doesn't come to us at all actually.
okay, so from corporates, respective corporates, it goes to the equity, and that it goes to the government directly, indirectly.
Correct.
Okay.
And it lies in your account only. Well, it is in e-format, but if you want to withdraw, you can withdraw and you can take the money. If you have shares, you can sell and you can take the money.
Right.
Any other questions, Nidhi?
Yeah.
Yes.
I have another
Yes.
question. Sorry. Go ahead.
Yes. So next question is from Sana Mokashi.
Yes.
Thanks for such a good insights along with data. My question is in past market, wherein bear phase for long period of time, like 4 to 6 year, and also index correction was between 38 to 70%, whereas currently it's only 18% correction in 2 years. So how to look at that and how those correction was different from now?
So that's an interesting question. So what is different about this time is that uh, like if you look at from top down the indices, it doesn't look like the correction is all that steep. But if you look at how much the correction has happened at the individual stock level, then the correction is almost as much as it was in say 2017, 18, 19, or it is as much as it happened in 2010, 11, that period. The reason why the index level it looks less because something goes up also simultaneously. So because of that, up and down in different sectors, the index does not go down as much as the stocks, but individually, the stocks are down quite significantly actually.
So was this the cash position address, the question, the net cash position of market, the
Uh-huh.
mutual fund industry? Was this addressed? I lost in 5 minutes
Yeah,
the
yeah, it was
connection.
addressing. You have
Okay.
some data you can share.
Yeah, I had some data. So hope you can see the screen. So the cash position of
We can't see
the
the
market.
screen actually. Now we can see, but we can't see the screen. Yeah, correct, correct. Yeah, yeah, we can see it now.
You can see it, right? So the
Yeah.
net cash is about 8.4. Earlier in March, it was 18. So slowly it went down 7.6 in March 25. Currently, as per Jan 26, it is at 8.2% cash.
This is of the mutual fund AUM you're saying.
Yes, mutual fund
Eight,
AUM.
correct. So
It,
mutual fund AUM is about say 80 lakh crores. So out of that, 8 is cash, like what it is.
and for 43% goes to equity oriented.
No, no, but that is
13%.
liquid. Yeah, that is liquid funds. That is not equity. We were talking about something else. We're talking about what is the for cash available for equity fund managers. So that is not there in this. This is a totally different thing.
Okay, ठीक है. But that is what I think is this. ठीक है, not an issue.
Yes. So
Yeah.
next question is from RVS Kumar. Looking at the FIS sell-off continuing, how long can DIs continue to absorb the selling? Do you foresee any drop in domestic SIP inflow in coming months?
Yeah, it is possible. Okay, there will be a drop in SIP or something. It always happens every time there's a bear market. The SIPs are stopped and also that happens this time also. It could happen. So that is there, but uh, the markets are slave to fundamentals. So as long as the earning was not there, which is why market did not go up. If earnings come back, markets will go up. That is as simple as that. And FIs have been selling for last five. They have sold in last 5 out of 6 years. And in spite of that, market went up in 21, 22, 23, 24. So this time also it will go up. ऐसा कुछ नहीं कि and the SIP number is growing openly. It's not like if it is like 35,000, I don't know what is the SIP number, but if it is 35,000, it is going to go down to 34,000, 35,000. And that will be only for 1 or 2 months or 3 months. And as the market recovers again, it will go up. So SIP, it's not like 35,000 से वो crash होके 25,000 होने वाला है. I don't think it is going to happen. So
Next question from Ives Suri. What is the best place to park emergency funds, assuming max tax bracket?
arbitrage is one of the best funds to invest. This thing arbitrage funds offer returns which are similar to liquid funds, and the taxation is equity in that case, and you get money in T+2 days.
Okay, next question is from Savre Pranav. It is generally said that till last bull losses hope, bear market doesn't end. With every month coming SIP inflows, how much it may take to start new rally, or it will be really difficult to see 2020 to 2024 times again?
No, SIP stoppage has been there at industry level. It has not happened at my level, but it has happened at industry level, and it's happening for last 4 5 months. There was a significant in SIP stoppage in this November and December when there was a big bull market which was happening in gold. A lot of people stopped equity SIP and they shifted to gold. So after it is corrected again, now things are stable. But and I think in last 2 months also, there are a lot of people would have stopped SIP. But often what happens is they stop SIP in XYZ fund and they go to something else. So maybe they'll stop SIP in small cap fund and they'll go into enhanced value. जितना अच्छा रिटर्न दिख रहा है वहां पे चेस करते हो. So fintech, a lot of these are like people who come from fintech platforms. They look at last 1 year return, 2 year return, and they invest on the basis of that. So when they say SIP stoppage and the SIP number is not going down, why? Because on one hand he's stopping SIP in small cap fund and he's going to something else where the returns are okay, like something like in gold fund or enhanced value or something like that. Wherever the returns are looking decent, he moves to that. So that वो jump करते रहता है एक fund से दूसरे fund. That's why the stoppage ratio looks high. But ऐसा नहीं कि पैसा नहीं आ रहा है, 35,000 तो आ ही रहा है. Yes, there's somebody else wants to ask. Yeah, Vamsi, yes.
How often do you review the funds and their and then take the decisions, like year or 6 months, 2 years? I'm talking about the core funds.
The core funds ongoing basis we take this, like we look at the funds and we don't check it out very easily unless there is a consistent underperformance or the fund manager is like following erratic strategy. Only then we throw out the fund.
So,
Otherwise,
if
we don't. And then like a lot of the calls on core funds are based on our view on the market. If we feel the market is overvalued or something, then we take a call on the core funds की थोड़ा profit book कर लेते हैं or something like that. That's right.
So you don't do any relative performance on 6 months or 9 months.
I mean that keeps changing, right? It will keep changing. The winners will keep changing. If you give money to good fund manager over 3 5 years, he'll generate good return. Today sitting in you will have been say April of 2026, you cannot tell ki which is going to be the best fund in April of 2029. Nobody can tell that. So you give money to manager and बना देगा पैसा वो. And क्या है कि मतलब what there are two things. एक fund क्या return बनाता है, and दूसरा है कि what return you make. So long as you don't, जैसे तुमने बोला ना कि गलत जगह पे नहीं लगाया and right time पे if you invest when the valuations are okay, sentiments are down and all, then you make good money. So you should make money and you should preserve that money when the time comes to book profit. That time you should book profit and you should preserve the returns also. तो वो करेंगे तो you make money whether वो fund is top performing or not doesn't matter. So our focus is on how you should make. तुम्हारे portfolio में पैसा बनना चाहिए. मतलब whether that fund is top or rank or not is not relevant. We have to be in the right category. We have to give money to good fund managers and take time to time action. That's how you can make a predictably good money. That's how we look at it.
Okay, thank you. Yeah, got it.
Yes. So next question is from Yamlata Tiwari. Do you see the interest rate rising for home loans or education loan? And another is also, what is the rupee US dollar? Will it cross 100 due to war? Any thoughts?
So if the war extends for another couple of months, maybe 3 4 months, 6 months, rupee can rise. If the oil prices go up 150 to $150 or something like that, or if war lasts for 6 months, 1 year, then interest rates will also rise. Otherwise, I don't think interest rates will rise much. And when the rupee will top, I don't know. That I think will happen when it all depends on oil when the war ends and all. Whether it will go to 100 or not, also I cannot tell. But it probably may not go, is my opinion.
Okay. Then the last question is from an anonymous. What is the primary reason you don't recommend to take leverage or loan from banks or mutual funds and invest back in mutual funds if people are ready to take slightly risk and market bullish and market bullish?
हो ऐसा बोलते हैं ना कि there are old investors and there are bold investors, but there are no old and bold investors. So I have been a gray on hair on my head to tell you कि नहीं करना चाहिए. And as a financial advisor तो मैं कभी नहीं बताऊंगा. मैं खुद के पोर्टफोलियो में शायद कर भी दूं, but I will not tell anything like that to any of my clients. So are we done, Snedeep?
Yes, yes.
Okay, thank you. Thank you so very much for joining this session. We'll keep it a quarterly affair. Probably last week of every quarter we'll try and first week of every quarter we'll try and do this thing. Thank you so very much. I hope it was worth your time. And goodbye and have a nice weekend, all of you.